What is up, YouTube? Welcome back to another video on high altitude investing. Today, I am very honored to have a guest with me today, Michael with Invictus, and we are going to be talking a little bit about what he does with his investing, what I do in my investing, and some of the markets as a whole, the world markets, crypto markets, and seeing what we can learn from each other. It's going to be a lot of awesome stuff in today's video. Make sure you stay clear till the very end if you want to learn something good and have something to take home today that is valuable. So, Michael, what brought you into the investing space?
First, Dallin, thanks for having me. Like you said, my name is Mike Singleton. I'm the founder and senior analyst at Invictus Research. And since I'm sure none of the listeners on this channel have heard of me, it probably makes sense, like you said, to do a quick introduction. Right now, I run this investment research, Invictus, but the idea for Invictus was actually conceived at my old job where I was a hedge fund analyst. And it was a terrific job. I got to lead my own investments. I got to travel to conferences. I got to talk with some of the smartest investors on Wall Street. And I was telling this to Dallin earlier, I guess it was off camera, that Wall Street analysts are really, really smart, right? So when a stock picker from a hedge fund would get something wrong, it was never because they were dumb. At least this was my observation. It generally happened because Wall Street is highly compartmentalized. You know, one guy will cover technology stocks, another guy will cover industrial stocks, another guy might cover commodities. So frequently I found that when these analysts would make a stock pitch and they get something wrong, they'd almost always get it wrong for the same reason. They get it wrong because they'd miss the forest for the trees. They'd miss the bigger picture. They would miss what we at Invictus call the business cycle. And the irony is, if you asked any of these analysts individually, hey, do you believe that the economy cycles? Do you believe that the market cycles? I know Dallin does a lot of work on market cycles. They'd say, yes, of course. Of course, we know that the economy cycles. Of course, we know that there's a business cycle. But they did not have a means of integrating that understanding into their own investment process. Why not? Well, like I said earlier, it just wasn't their purview. They were compartmentalized. They were focused on their niche. So that became the idea for Invictus. I would do all of the legwork, all of the research on the business cycle, including how it impacts crypto, and deliver that research to my clients in short 5 or 10-minute videos. That's the format of our research. I think of it as sort of like the business section of the newspaper, but instead of from the perspective of a journalist, from the perspective of a global macro investor. So that's kind of the short pitch and the short background.
Nice. Thank you, man. And so you're working with all sorts of different guys then. In Wall Street, you've probably met with a lot of hedge fund guys or met a lot of them personally. And what's kind of their view on crypto? What do they think of crypto in your experience?
Well, I think that it varies. I think that there is a cohort of institutional investors that are very old-fashioned and sort of live in denial. It took them 20 years to invest in technology stocks. It'll probably take them another 20 to invest in cryptocurrencies. So that's a very, very big cohort. And I think that, as I'm sure many of your listeners are crypto bulls, they should be pleased to hear that, because it means there are plenty of potential buyers in the future.
Right.
I don't know exactly when that materializes, because Wall Street is very slow to change. But that's a lot of capital out there who's still very skeptical of crypto. And then there's also a smaller group of sort of forward-thinking individuals that have started to embrace it. It's starting in venture capital, as I'm sure you know, and gradually working its way through the more institutional side of the business.
Right. So there's at least some guys in big money and Wall Street, or the guys that are moving markets, as we like to say in crypto, starting to get into the crypto space as well.
Oh, yeah. Small but growing, I would say.
So when we were talking together off camera, you mentioned a little bit about how the internet was so expansive because of low regulation and is still very under-regulated. Do you believe that that's why cryptocurrency is also so profitable up and down, is due to the fact that it's not regulated, so it's kind of like the wild, wild west?
I do think that. I think that regulators and investors need to understand that economics generally is all about trade-offs, right? And so one of the fundamental trade-offs between regulators and investors is the relationship between risk and growth. And the more you regulate something, typically the lower the risk, but also the lower the growth. One of the reasons that the internet has become, or has been something that's grown so fast and become such an important part of the economy is because it's been regulated much less than more traditional parts of the economy. So think about the internet versus banks or payments companies. And think about the innovation that you've seen in internet companies versus, say, Wells Fargo. They've been very slow to adopt financial technology relative to companies like PayPal or Square. Or think about crypto or internet companies relative to pharma, right? Pharmaceutical companies are highly regulated. And so you see most of the innovation coming out of, a handful of larger scale players, and it happens much more slowly than you would expect given the state of technology and the budgets that they spend on research and development. So is that one of the reasons that I think crypto has been a place that you can make so much money and lose so much money? Absolutely. And I think it's one of the reasons that smart investors should be excited about investing in crypto is if you're a good investor, if you're a good analyst, there is a lot of space to earn excess returns.
And also, as technologies develop, they do tend to get more regulation over time, right? And what are some of the pros and cons of regulation?
Well, I think that you can look back on the financial system in the US as a pretty decent example. Prior to 2008, the US economy was growing much more quickly, but it was also prone to sort of wider gyrations and more significant contractions in growth. Post 2008, the financial system has been much more regulated, right? So we haven't really seen a downturn, except for COVID, really. We haven't really seen a downturn, a big contraction in the US economy, but likewise, we haven't seen fast growth. We've seen growth significantly slower than pre-2008. You can see that in something like GDP. You can also see it in statistics like labor force participation. People never rejoined the workforce afterward because the economy just wasn't robust enough to support that. So if you're looking for what a highly regulated system looks like versus a less regulated system, you have a great example in the broad US economy.
Yeah, that's interesting. Also, I'm wondering, so the US economy was growing really fast in the early 2000s, right? And that was less regulation during that period?
Faster, yeah.
So or not early 2000s, like the late 90s and basically the early 2000s, we started to crash, right? So all of that was different than what we're seeing now. Even though the economy has been growing, it's not near at the rate that it was back then, right?
Right. It's been a slow recovery, so to speak.
So do you think that will accelerate as we go? What are some of the factors involved in the economy accelerating growth? Or is it because of this regulation that we're just going to kind of see it fizzle out? Or is it just, what do you think that has an effect on?
There are a lot of, reasons that the US economy accelerates or decelerates. There are some longer term ones like demographics that I'm not even really thinking about right now. And that said, the one that I was thinking about pre and post the great financial crisis is the banking system, right? So banks were much looser with credit prior to 2008, right? And you saw that went awry, right, with the housing market. Banks took too much risk. It led to speculation and eventually a deflationary bust. But you need healthy credit growth to see healthy growth in the economy. Why is that? Well, you want good ideas to be funded, right? If you have a great idea and a bank analyst sees that it's a great idea, they should give you money so that you can go create a business, right, and create value for society. If bank credit is too tight due to regulations or whatever else, that's bad. That actually stymies growth. And so what I was referring to in that prior comment was the fact that the United States credit system, the bank credit system, has become much more rigid since 2008 and 9. And that's not changing, to be clear. Regulation tends to go only one way. Things get more regulated and they rarely get, they rarely get less regulated. So to the extent that we see real innovation in finance, I think it'll be financial technology. And I think that cryptocurrency probably will play a big part in that. Where it goes, I don't know. I'm not a huge fintech guy, and I'm certainly not in the weeds of crypto, the literal protocols and the technology underlying it, but that's my guess from a high level.
So what would you say as investors, what we need to do, and obviously not from a financial advice perspective, but just from looking at the markets, between the crypto markets, from the world markets, do you look at it as having most of your money in world markets, most of your money in cash? just a little crypto? How do you look at your diversification when it comes to this kind of thing?
That's a good question. Should I give a bigger explanation of how crypto fits into the macro universe and the business cycle? Maybe that would be some helpful context.
Yeah.
Because I like crypto personally, but perhaps within the context of a larger macro portfolio. I'm not a crypto only investor. I'm not that forward thinking yet. So anyway, yeah, maybe I'll do that. So I think the first thing to understand, if you're trading crypto against other asset classes, so against stocks, bonds, commodities, currencies like the dollar, the first thing to understand about trading crypto is where it sits on the risk spectrum. And I know, Colin, you might not completely agree with me on this. But look, I'm not talking about where crypto or Bitcoin should sit on the risk spectrum. I'm talking about where the market prices crypto on the risk spectrum.
How they look at it currently?
Yes, exactly. So it's volatility, its correlation profile. And to be clear, the market prices all crypto from Bitcoin on down as risky, as a risky asset. So what do I mean by that? I mean, think about a line on a page going from left to right. On the left side, you have very, very safe assets like treasuries, government bonds, investment grade corporate bonds. And then further to the right, you've got junk bonds, high yield credit. Then you've got stocks further to the right of that. And then you have commodities, and crypto is pretty much as far right on the spectrum as you can go on the asset class level, which, in a sense, you probably understand because it's very volatile.
Yeah.
Now you might say, or some of your listeners might say, look, Mike, I really understand Bitcoin and blockchain and decentralized finance. And fundamentally speaking, I know there's nothing safer than Bitcoin. And you could be 100% right. I'm not really addressing that. Again, I'm just talking about how Bitcoin trades. Again, that means volatility, its correlations with other assets, how the market prices it on the risk spectrum relative to other assets. Just a clarifying point about risk. I think people hear risk and they think bad. Is risk always bad? Does the word risk imply some sort of inferiority with regards to making money in markets or to building wealth? And the answer is no, it does not. The reality is, if you want to make money in markets, crypto, stocks, whatever, if you want to make money, if you want to get rich, you have to take risk. In a capitalist system, there's just no way around it. If you take no risk, if you only invested on the left side of that spectrum, say in government bonds, you'll never, ever earn high returns. And realistically, you'll probably see your purchasing power diminish over time. The reason that you can still make a fortune in crypto is, like I said earlier, it's because it's risky. So as crypto investors, you all should be embracing that it's risky. Of course, the trick is there are good times and there are bad times to take risk. 2020, beginning of 2021, those were great times to take risk in crypto and stocks, whatever. The last 6 months, a very bad time to take risk. Stocks are off 15 to 25% this year, depending on which index you're looking at. Bitcoin is down 68%, something like that. So what determines when is a good time? Well, I can stop there if you want, or I can talk about what determines a good time or bad time to take risk.
Well, first of all, I'd just like to say that we do completely agree that crypto is a high-risk asset because I look at it kind of like a tower of cards situation where we have all of the fundamental economic things. You have like food, oil, things that are fundamental to what run the economy. And then on top of that, you get like the internet, which is like technologies that are being developed on top of the fundamental basic human needs. And then crypto comes up on top of that. It's being built on top of the internet. It's basically built on top of other foundational economic structure. So from that perspective, it would also fall into a higher risk, just like the internet. Like Warren Buffett is very hesitant about tech stocks, right? He's always been.
Right.
And I think he looks at it that same way. Doesn't he invest in a lot of food companies and different things like that?
Yeah, that invest in what you know sort of thing.
Yeah. And so I do completely agree with you on the risk profile with crypto. And I think it's important that the community is aware that crypto is a highly volatile, high risk asset, which is what makes it so profitable and so risky to invest in. So we completely agree with that. Now, we may have a difference on opinion on whether now is a good time to invest in crypto or not. That might be where we have a disagreement on. I don't know.
Very possible. very possible.
So what do you think, man? You think now is a bad time, good time?
It's a good question. So I'm definitely, I'd say it depends on your time horizon, right? Well, let me take a step back, because I just said crypto is really risky. So maybe it makes sense to define what's a good time to take risk and a bad time to take risk. And I would say that you can describe good and bad times to take risk with two words: financial conditions. What does that mean? Sounds kind of vague, right? Sort of jargony. Well, financial conditions are really determined by just two things. One is the organic state of the economy. How's the economy doing, right? And two is the Fed, meaning the Federal Reserve. So when the economy is doing well, risky assets tend to do better, including Bitcoin. And that should make sense. If you and I are both doing well in our business and we both have a lot of money, we're more likely to take that money and invest in something like Bitcoin or Ethereum or whatever, right? Or stocks. When the economy is doing poorly, risky assets do worse. Likewise, on the monetary side, when the Fed is stimulating, when it's lowering interest rates, when it's expanding the size of its balance sheet through quantitative easing, that also really, really benefits Bitcoin. So what we've been going through over the past few months is slower economic growth alongside the Fed removing liquidity, right? Increasing rates and shrinking, or at least planning to shrink, the balance sheet at the same time. That is the worst economic backdrop for Bitcoin. And guess what? It's actually almost a mirror image repeat of the backdrop in 2018, which was, of course, the last time that Bitcoin crashed. So anyway, when we think about Bitcoin at Invictus, we spend a lot of time thinking about financial conditions, which again means underlying economic activity and what the Fed is doing. So in terms of what we think about, this is going to sound like a little bit of a cop-out answer, but we would get back into Bitcoin when either economic conditions improve or when the Fed starts stimulating again. And that will happen. It's just a matter of when, right? Generally, the way the business cycle goes is that the economy will turn down, the Fed will go, oh no, and then they'll start stimulating. So probably the stimulus comes first. I don't know that it's anytime soon. The market will tell us. It's not like it's going to catch us by surprise when it does happen. But that's what I would be looking for. That's what I would be on the lookout for. Over the long term, I take sort of a portfolio management approach to this rather than a technology approach. Like I said, I have to qualify everything I'm saying by admitting that I'm not a genius on the technology underlying cryptocurrencies. I'm a business cycle guy. But I think in terms of a potential price target for Bitcoin over the long term, I think a quick and dirty way to arrive at one is to look at Bitcoin versus gold. So gold has a market cap of $12 trillion. I think it serves sort of a similar portfolio management purpose, right, as a hedge against, the monetary system imploding, basically, or against government abuse of fiat currencies, you could say, seizing stuff or irresponsible fiscal policy. So anyway, gold has a market cap of $12 trillion. Bitcoin's at about 550. So if we were
550 billion?
Billion, yeah, excuse me. So if we were to see Bitcoin valued at the same level as gold, which I think is pretty reasonable, to be honest, that would imply long-term value. Yeah, a long-term value of $650,000 a coin. Again, that's a long-term number. That's years out. I'm speculating. But I'd actually like to hear your thoughts on this too. What do you think?
Yeah, so long term, I do completely agree that the crypto space will go into multi-trillion dollar levels. Now, whether I agree it being because it's a store of value like gold, I think that there's a lot to be said for the actual technology behind blockchain, like the technology behind operating systems on a computer, or as opposed to just looking at it as a store of value. So where that money comes from, I think it can come from tech. I think it can come from a lot of avenues as opposed to only being viewed as a store of value like gold. There is kind of I agree with the perspective that there's an idea around Bitcoin that it is a store of value and that it's like digital gold. And that's the psychology of the people around it. But I do believe that will evolve over time. I do agree with your long-term kind of view of a multi-trillion-dollar market cap in cryptocurrency. I mean, we already basically hit a trillion. We were just shy of that trillion point on Bitcoin, you know? So
Yeah. I actually thought you'd hit it already, but
we
maybe
might
I was
have.
wrong.
I'd have to look. I don't look at the market cap price near as much as the actual price of Bitcoin. I'll just quickly look here, BTC market cap, and see what we got for where the actual peak was. I think it got either to it or very close. I know that it was a psychological resistance, just like how there's a psychological resistance at 20,000 per coin. If I remember right, there's a psychological resistance at around a trillion in market capitalization as well. Yeah, it was 1.2 trillion was our psychological resistance. So if it's already been in the $1.2 trillion, I completely agree with your idea that it can hit multi-trillion long term. And I think it would kind of be ignorant and somewhat arrogant to assume that cryptocurrency can't go into multi-trillion long term, considering what it is doing for the world and the financial systems.
Right. I think it's akin to probably saying e-commerce can't go into the multi-trillions in 1998 or something, right? People make these forecasts with a lot of confidence, despite not really understanding the underlying technology all that well. So I think, yeah, being open-minded about crypto will be a huge advantage for any investor.
So what about the guys that are still waiting and they're like, you know what, I don't know about this whole crypto thing. I might need to wait 20 years. What do you do? Do you tell them to accumulate over time? Do you tell them
you can't save them?
Can't save them. They're just already left in the dust.
Yeah,
can't
you just
teach
gotta
an
let
old
them go.
dog new tricks.
No, I don't think so. I've had a hard time with that.
Oh man. So yeah, I do think that we have a pretty similar view on the market long term. I personally believe crypto is quite undervalued in the short term from market cycles and what I do in market cycles. Now, I don't do fundamental analysis. And so, it will be interesting to see how the Fed plays out in connection to all of this as well.
Indeed. If you're interested in a cool chart, take a look at Bitcoin versus real rates. Pretty interesting inverse correlation there. And that's just one way of viewing the impact that the Fed has on the price of cryptocurrencies.
Or any high risk speculative asset.
Yes, exactly right.
This happens to penny stocks too, right? When the Fed is printing crazy. What about if we had another situation where they start giving free stimulus? Even if they're not adjusting the rate of inflation, if they're giving free stimulus, will that still basically create high risk assets going up? Or would that make people in a fear? What would you think that would affect high risk assets?
I think it would be very positive. I think you would see a repeat of what happened between March of 2020 and November of 2021. I mean, it depends on the size of the stimulus, the size of the fiscal distributions, right? But what made the post-COVID stimulus unique relative to other recovery plans in American history, relative to the stimulus post the Great Financial Crisis, was that the fiscal component was so much more significant, right? We mostly saw monetary stimulus on the back of the Great Financial Crisis. We saw the Fed essentially liquefying the banking system, printing money, but only allowing it to circulate within the banking system. And what we saw post-COVID was the Fed was stimulating, doing the same things it was before, but we also saw the federal government mailing checks, right? Doing something that looked sort of like universal basic income. You saw it doing PPP loans, which eventually became more like grants. You saw enhanced unemployment payments. You saw the government taking money or, putting money in people's pockets and then financing it with deficits. That's the most inflationary form of money printing, is when the government expands its balance sheet and then gives that money to people who will spend it on goods and services, or as the case may be, on risky investment assets like stocks or Bitcoin.
So what do you provide to people? I'd love to send people over from my group and my website over to you as well. So what can you offer people? Where do I need to send them, and what do you offer people?
So, like I mentioned earlier, my ambition for Invictus is to simply replace the business section of the newspaper. So many investors, whether hedge fund analysts or individual investors like you or me, they start the day by reading the mainstream financial media, right? By reading Bloomberg, by reading the Wall Street Journal, by reading Reuters. And the reality is that sort of stuff is really closer to entertainment news than to real business news that can help you make better investment decisions. You read those things every morning, and best case, maybe you're entertained, but there's really no case in which you're in a better place to make real money investment decisions. And that's where we step in at Invictus. We think most investors, institutional or individual investors, would be far better positioned if instead of reading the business section, they took 5 or 10 minutes each morning to consume something more like Invictus, to understand where we are in the business cycle and what that implies for future returns for crypto, for stocks, for bonds, for everything else. We cover all of that. And we have a monthly, a weekly, and a daily product. The monthly and the daily are both delivered over video. So it's short, it's respectful of people's time. We only cover what's really important, and hopefully we keep it at least mildly entertaining so that it's interesting and you're not as bored as you would be if you were reading the journal.
Yeah, that sounds awesome, man. I know for myself, if I watch anything that is just contrary to what's beneficial to me, like if I go, for example, just read a bunch of junk in the newspaper, I can't think as clearly, I can't make as good decisions. Whereas if I'm focusing on what's important, if I'm focusing on what's really happening, then I make better decisions, I think clearer, and my life reflects that. My finances reflect that. My confidence reflects that. And I don't get as arrogant or cocky too, because I tend to think that there's this thing that happens where if we absorb a lot of lower grade information, we become it. It's like you are what you eat, and the same is true for information.
Oh yeah, 100%. I think that's right on.
So yeah, man. And you've got the website I can link in the description of the video. And then I've got your Twitter too. You've got a Twitter handle I can link in the description of the video as well.
Yeah, that'd be great. And if anyone is anyone cares, it's invictus-research.com. That's the website, and the Twitter handle is @InvictusMacro.
Sweet, man. Yeah, so definitely go check out Michael's website. Go purchase his weekly or his monthly and start learning about this stuff. See what you can learn fundamentally. I know I'm going to dedicate myself to learning a little bit more about the fundamentals of world markets. I've already learned a lot from Michael, even just when we were talking the other day on the phone together. And in today's session, I've been learning a lot about the market. So I tend to think there's going to be a lot of value. You go check out his site and see what he's got to offer there. Is there anything else you want to talk about here today, Michael? Anything you want to share with investors?
No, that's all for me. Thanks for having me, Dallin, and really enjoy the channel.
Hey, thanks, man. I'd love to do more stuff like this down the road, especially as the markets progress. If we start crashing, if we start mooning, I think it'd be awesome if we hopped on another call like this and we can benefit the community as a whole doing so. So I really appreciate your time, man. Thank you so much for coming on. I think we provided a lot of value to people today. And I'm thankful for everybody that tuned in to today's video. Comment down below if you want to see more content like this. Hit the like button if you learned something. Share it with your friends. And we will see you in future videos. As always, stay profitable out there.